Stavros Tousios for M4Markets. Today we're going to have a quick look at pound and Bitcoin. There is something interesting that might actually print in both charts, and we get similar signals, so it's a good combo for sure to dive into in this Tuesday's video. Now, the next level we need to pay attention to is the swing low down at 118.39. Very important level. Of course, that doesn't mean that's the only one. We've got the 38 and the 50 Fibonacci's as well. We still managed to stay above the 23. Can we stay there? Well, that is going to depend on where the short-term price action takes us. For now, it looks like we saw a bounce, and we did see that bounce with a divergence on the RSI, as you can see, right? Is this going to go above the 50% though or not? If not, then I will be more interested, because that's an ideal pattern, to see an actual diagonal here for an actual reversal to the upside, whether it's going to be an actual reversal to the upside or just a deeper correction, but short-term upside either way. So I will be looking, as I said before, first of all, at the 50 Fibonacci over here. Look, we stopped at 38. Is it possible to go higher? Yes, we could get another bounce and move all the way to 50. Okay, perhaps even 62. But I want to, and I prefer for shorts, to stay below the 50. Because the 50 is going to give me the chance to get an actual wedge. And the wedge will be, of course, will appear, or just so you know, if we do see an overlap above the swing low of 19, in case we do fall lower down, right? That's what it should like. Now, why, you may ask, I want the wedge? Because the wedge implies reversals, whether a short term or not. Okay, so if we get the wedge, then it will be a much better signal for a short term or long position, right? At the same time, we would also get a double divergence signal. What a double divergence signal is two opposing divergences that point to the same direction. So you would have something like this, okay, these two signals, which means further downside here, and that would make a divergence down between the third and the fifth. Okay, so this is the idea pretty much. We are currently seeing perhaps even something that someone would call an inverse head and shoulders. So it is possible to go to 119.90, just below 120, then do another deep wave to the upside, and then actually just go down and complete this wedge pattern. Now, BTC, last time we saw also, we've drawn this channel, and this is exactly where we fell down to, you see, and then we went back up. We didn't go up to fresh high. Higher low, back to the previous top, or no new high. So what remains to be seen? Another leg to the downside and further upside, right? Supposedly, one would assume. But look, we've also got some sort of signal over here that has not yet been confirmed. Why? Well, because we don't have a higher price. So the moment we get a higher price here, we're going to confirm that there's going to be momentum divergence over here. So with this coming up here quite impulsively and seeing somewhat of a correction here, what we would prefer again to see is another wedge pattern over here, right? This is the ideal structure for a terminal wave. Okay, so the trend, short term or not, would end with a wedge. Then that means there's much higher chances of a short-term reversal. That wedge would give us the RSI signal we're looking for. And then from there, of course, the break of the channel is going to kind of not confirm, I would say, but support the case of a short. The big level is down at 21.38. But before that, we also have a very high activity around 23 something, just above the 23K, guys, right? So you might ask, what is the expectation here? The expectation, the ideal expectation, let's just say, not what I'm expecting to happen, but the ideal expectation would be for a further continuation to the upside, okay? Get a fresh high so we can confirm the divergence, then a move to the downside with an overlap of the previous high, and then another leg to the upside, so that we get between these two waves also a second divergence signal on the RSI. And that second divergence with the new peak is going to be where we would be ideally looking for the markets to change to the downside. Now, of course, if we go lower and we lose like the support at 24.26 and lower, of course, with the swing lows over here at play, then the situation is going to be a little bit different.